One of the most important aspects of investing is to know when you're getting out before you get in. This is called your take profit strategy. You need to know when you're selling said asset before you even buy said asset. So a lot of you, I'm sure, have heard of limit orders, and they allow you to set a price range where you want to buy or sell an asset at. Now, what if I told you that you can make passive income to sit in a limit order while you wait for the price of your asset or assets to hit their targets instead of just sitting in it and not getting paid anything or even paying a fee to enter into the limit order? That's exactly what I'm going to show you guys how to do in this video, and it's through a strategy called yield farming. So we're going to cover what limit orders are in case you're not familiar. We're going to cover what yield farming is, and I'm going to show you how you come up with your take profit strategies and how you can use yield farming to sit in your limit order and earn passive income while you sit in it versus just using a traditional limit order while you wait for your price targets to hit so that you can take profits on your assets. Before we start this video, I do have to say that this should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only, and like we always say, do your own research, but use this channel as a starting point. So now let's get started. Let's start off with what is a limit order. So let's say you buy $1,000 in Ethereum, and Ethereum's at $2,000. And let's say when Ethereum goes up 100% and hits a price point of $4,000, you want to sell 20% of it for USDC. So you go onto an exchange, Coinbase, Gemini, Kraken. You know, if you're a follower of this channel, you know that we don't use centralized exchanges except for just on and off boarding. We don't keep funds on the exchange for security reasons. But you set it up on the exchange so that once Ethereum hits $4,000, you're able to sell as much as you want into USDC. So that way you don't have to like get caught up with your emotions and think about it in the bull market, and or if it's going up and be like, oh, maybe it'll go up more. Maybe, let me just let it rise a little bit more. Or maybe you don't have the time. Maybe you're not by your computer. Maybe you're on a plane and you can't get to it in time. So limit orders allow you to do that same thing for selling, but also for buying too. So like, let's say Ethereum's 2,000 and you're like, I think it'll get to 1,000. You can deposit some USDC on the exchange, and once it gets down to 1,000, it'll buy whatever amount you said that you wanted to buy once it hits your price target. Now, limit orders are cool, right? They will never go away. You do have to pay to enter into a limit order, and you're not making any money by sitting into them. So now let's talk about what yield farming is. Yield farming is the act of loaning out your crypto on different decentralized platforms in order to get a yield. Now, it's three main ways you can yield farm. Facilitate insurance premiums using your liquidity. Using your liquidity to facilitate borrowing and lending, like on Aave or Compound, you supply assets, and the people who borrow them, you get paid interest to loan them your money or loan it to the platform so the platform can loan out the money through their various parameters. And then the third way, which is the most profitable way and my favorite way, and the way that we teach here at Know It Owls, in our Know It Owl Academy, is the best course on yield farming to help you generate passive income in the world, is through providing liquidity to facilitate trades on decentralized exchanges such as Uniswap. Basically, you can go on Uniswap and, like, going back to the Ethereum example, let's say you think Ethereum is going to trade in the range from 2,000 to 4,000 for the next year. You can set up a range or multiple ranges from 2,000 to 4,000, from 2,500 to 3,500, from 2,900 to 3,100. The more tighter your range, the higher your passive income. The wider your range, the less your passive income. But also, the wider your range, the less your risk is lower. Tighter your range, your risk is higher, because whenever the price goes out of your range, it's a limit order for the losing asset. So if it's a ETH USDC pool and it goes out of range to the upside, you're in the underperforming asset, which is USDC, and if it goes out of range to the downside, you're in the underperforming asset, which is ETH. The more it goes down, the more it buys. Okay, so why? And if you want more information on yield farming strategies, I have plenty of videos on my channel covering all that: bear market strategies, how to get things set up, how to come up with your own strategies. But the purpose of this video is to talk about why you should use yield farming when you're either taking profits or you want to buy the dip, basically replacing a limit order. Okay, so now before we get into the charts, I want to talk about Aperture Finance, and I made an entire video on this, so I'm not going to cover the whole platform. So basically, Aperture Finance is a platform that helps you with managing your liquidity. You can enter into a UniV3 pool straight from the website. You don't even have to go to Uniswap. And then you can say, hey, once ETH gets to 5,000, take me out of this pool, or leave me in this pool for a month or 2 months or a year. Like, you can use different parameters to help you manage your liquidity so that you don't have to be by your computer the whole time. One of the cool features that they have is a revenue earning limit order feature. Let's dive into it. So we're looking at our ETH USDC chart here, and just going back to our same example, ETH is at 2,000 right now. And let's say you want to take profits on ETH when it goes to 2,500, 3,000, 3,500, 4,000, and then all-time highs 4,800. But you don't want to use a regular limit order. You want to make passive income. All right. So basically, you go on Aperture Finance, you click limit order, and you click what you want to sell. You want to sell ETH and buy USDC, right? And you can set up as many of these as you want. You set your price. You can pick your fee tier, gas ceiling, etc., etc. I'm not logged in, so it's not showing everything. But you basically have this thing. You sell ETH once it hits your price target. So now, let's say you have $1,000 and you want to sell a little bit every time it goes to these tiers. Well, hey, you provide liquidity. So right now, ETH is at 2,000. So let's say you started off and you provide liquidity from 2,000 to 2,500. Given it's at the bottom of this range, you're going to be providing liquidity in pretty much in like 99% ETH. And as it goes up, the smart contract, the Uniswap smart contract, is going to be selling your ETH and buying USDC. As soon as it nicks the top 2,500, you're going to be taken out of the pool at 100% USDC. So whenever you get back to your wallet, you can do whatever you want with it, whenever you want with it. So you're taking out your USDC plus your fees. And you can do this right now at this price. So you can set up another tranche from 2,500 to 3,000. You set up another one from 3,000 to 3,500. You set up another one from 3,500 to 4,000. And you set up another one from 4,000 to 4,800. Now, you're going to, and this one you're going to be in like 99% ETH. But for all these, since the price isn't in any of these ranges yet, you're going to be in 100% ETH. So you're basically splitting up your ETH, putting some in this range, putting some in this range, putting some in this range, and then putting some in this range. And the whole time while it's in this range, you're generating passive income. As soon as it enters into this range, you're generating fees. As soon as it exits it to the upside, you're in 100% USDC plus fees. Now, hey, what if it does something like this, where it goes up and down, up and down, and up and down, and then it nicks it one time and comes back down? Well, hey, since it nicks it, you're in 100% USDC, and you made all the fees from the volume that was generated while it was trading in this range. Now, here's another thing you can consider. You don't have to do it in individual tranches. Like, if you really want to turn up the passive income, you don't have to wait until it gets here. This will turn up the passive income volume, but it may be less depending on how long and how much money you put in each range and how long it trades within each range. So you can do from 2,500. You can do from 2,000 to 2,500. Then you can do from 2,000 to 3,000. Then you can do from 2,000 to 3,500, 2,000 to 4,000, and then 2,000 to 4,800, pretty much all-time highs. So your range is getting wider and wider on each. And I will put the most amount of money in this one, the top one, because it's going to be in there the longest time. And, we know ETH is at least going to get back to all-time highs. Actually, I'm not going to say I would put it there. It depends on your investment goals and your time horizon. If you're a day trader, obviously you're going to have different goals than someone who's in there for the long term. But this way, as long as price is above $2,000, it's trading within all of your ranges, right? So you're making passive income from all of them, but you're going to be making the most from the smaller ones / the ones where it's actually trading inside the pool. And as price is going up, it's going to be taking you out of the market for profit and fees. So instead of using a limit order and you're just waiting for it to hit and you have to pay, now you're getting paid in ETH and USDC to sit in this limit order from providing liquidity. And as soon as it hits your price target, Or you can set it for a certain time. Let's say you want to do it for a month. After a month, you're taking out from wherever you are in that pool your principal plus fees minus impermanent loss if there are any. And the cool thing about this, like let's say you have a bag of ETH and you want to sell like 20% of your ETH when it hits $10,000. Well, guess what? You can set a range from like let's say 1,500 all the way up to $10,000. And let's say it takes a year to get there. Well, hey, it'll take a year to get there, but in that year, you're going to generate some good passive income while the market is trading in your large range. Okay, now let's talk about you want to employ a yield farming strategy to buy the dip instead of just using a limit order to buy the dip. So it's the same thing on selling. We just talked about that. So instead of providing liquidity and you have your ranges going to the upside, you're providing liquidity, your range is going to the downside. So let's say you think ETH is going to hit $1,000, but you're not for sure. So you want to scoop up some in case it hits 1,700, 1,200, and 1,000. What you can do is provide liquidity from the range of 2,000 down to 1,700. As soon as it hits 1,700, you're taken out of the market with ETH. And again, since you're providing liquidity at the upside of this range, like let's say you do 2,000 to 1,700, if you do this right now, you're going to be in like 99% USDC, because remember, you're on the upside of the range, not the downside. And as the market goes down, it's going to be buying ETH for you. As soon as you hit your price target, it's going to take you out of the pool and you're going to have ETH plus your ETH and USDC fees in your wallet. Same thing when it gets down here to 1,200, as soon as it nicks that price or that tick, as Uniswap calls it, you're taken out of the market and 100% ETH plus your ETH and USDC fees. And same thing here when you get down here to 1,000. Now you have ETH for cheap. And if you want, you can provide liquidity back to the upside again in an effort to take profits again. So you're buying and selling limit order yield farming strategy. It's kind of has a flywheel effect on each other, because if ETH drops down to 900, we know it's probably not going to be there for a while unless something's fundamentally wrong with the technology. But I don't use limit orders at all. I use yield farming to take profits because I make more money. With that, I'd like to conclude this video. I know it's short and sweet. If you got value from this video, drop a like, drop a comment. If you have feedback, let me know. Also, our Know It All Academy is officially on sale. We cover all things crypto and DeFi. So we show you how to develop the mindset of a successful investor and yield farmer. We show you how to look at the charts to time your entries and your exits. We show you how to operate securely so you never get hacked. We have the best yield farming education in the world, and I know because I've taken all the courses. I follow all the YouTubers who talk about yield farming. I've been doing this since 2020, and we have a group of coaches who've been doing this for a combined 20 years experience. So if you're interested in something like that, visit KnowItAll.xyz, fill out the form on our website, schedule a free strategy session with me to see if this is a good fit for you. We want to get a good idea as to your goals. And if it's not a good fit, hey, at least you made a good connection. I tell you, we can keep the connection lines open because you never know what can happen. Also, if this is not a good fit for you, at least you get to learn a thing or two, and I'm sure I'll be able to point you in the right direction. We're trying to onboard as many people to Web3 as we can. More importantly, help people take advantage of yield farming while it exists in this capacity before mainstream banks and financial institutions are granted the regulatory green light. So if that sounds like that's up your alley, we would love to meet you. We would love to provide value to you and bounce ideas off of each other. But until then, I thank you for watching. I love every single one of you watching. And I'll see you in the next video. Take care.